Welcome to this week's episode of the Wealthologist Weekly. I'm Chris Hobart, your host, and today, I want to dig into the Dow Jones and what a new high may or may not mean for investors. You see, right now, the Dow Jones Industrial Index, it's close to breaking the 40,000 mark. Now, if it were to cross this threshold, not only would it be an all-time new high, but it would also represent really a symbolic recovery from 2022, which, if you remember, was pretty tumultuous. Now, these milestones, they're lauded as historical events, big things to either celebrate or watch out for. And that's the thing. The pundits, they're mixed on what they tell investors to do and how they should react. Some they warn to take profits before it's too late. And they go back in history and they give us the cautionary tale that goes back to when the Dow hit 2000 for the first time, which was in 1987. You see, the Dow began that year at 1896 and staged an incredibly impressive run, one of the best runs in history, surging nearly 44% to 2,722 in late August. But days later, it reversed and it dropped. Boy, did it drop nearly 1,000 points in 2 months. And the sell-off plateaued with a 23% crash on one day, October 19th. You might remember that as Black Monday. Now, on the flip side, others see these milestones really as validation of today's market and the foundation for future and better opportunities coming forward. And that crossing them only adds fuel to the engine of growth. Basically, that it's a psychological level that will ignite even more confidence in a market that wants to go higher and higher and higher. So here's the thing. Once again, we're faced with opposing opinions, and they're both pretty compelling. So what's an investor to do? I think the answer might become more apparent after we look at some historical data. I'm going to go back to 1955. Since 1955, there have been 1,120 trading days when the Dow closed at an all-time high. That's a lot of celebrations, right? Now, this averages out to be just over 16 per year, or more than one for every month. Now, regarding the S&P 500, there have been 1,228 trading days when the index closed at all-time highs, which averages out to 18 per year. Now, why would the 1,121st or the 1,229th all-time high be special? What could either of these signify that the prior ones could not or did not? Several years saw so many all-time highs that they could be measured in weeks, not months. For example, there were 71 trading days in 2017 when the Dow closed at an all-time high. Now, since the average year has 250 trading days, over 28% of them closed at an all-time high that year, which is 71 divided by 252. That gives us 28%. That averaged out to be an all-time high or new all-time high of 1.4 trading days every week for the entire year. Now, furthermore, to dig a little bit deeper, there's a guy named Nick Maguli, and he runs a popular investing blog, and he recently published a chart that plotted the all-time highs going all the way back to 1915. And the thing is, they cluster, meaning that all-time highs, they tend to lead to more all-time highs. And that's what's happened so far this year. There were 6 all-time highs for the S&P and 8 for the Dow Jones in January alone. So simply put, all-time highs, they happen all the time. And when they do, they've historically led to more all-time highs. Now, this in no way implies that major milestones like the Dow breaking 40,000 is any more or less significant than any other index level. Really, it's just a number. So what's the bottom line? So years ago, when I turned 40, my wife threw me a pretty epic birthday party. I'll have to tell you about it one of these days. Close friends and family flew in. It was a big celebration. And the night, it was incredible. And it's always going to be one of those top memories in my mind. The thing is, we celebrate big birthdays like my 40th because they represent milestones in life that society has deemed important. The same applies to the Dow. And investors should most certainly celebrate the Dow hitting 40,000 if and when it happens because it's significant, it's neat, it's exciting, like when I turned 40. Primarily because it's the world's greatest economy thriving over the past century in ways few civilizations have ever experienced. But here's the thing. Both my age, and I'm closer to 50 now, and the Dow index level, they're just numbers. I didn't wake up on my 40th birthday any smarter or more confident or wealthier. Aside from my great party that my wife threw for me, it really wasn't much different than any other day of that week. Now, the same goes for the stock market. It's not like breaking $40,000 is going to accelerate artificial intelligence or new cancer therapies or anything like that. Again, it's just a number. At some point, the Dow at 40,000 story is probably just going to be a distant memory, just like the Dow at 30,000 or the Dow at 25 or the Dow at 20,000 and all the others before. Ironically, the media will be the first to move on because these stories, they become pretty stale pretty quick. And they're going to be put on the shelf until the day when the Dow begins to see 45,000 on the horizon. Then it's time to celebrate again. Then take a wild guess at what's going to happen each and every time we go to that new milestone. The bottom line is that just because pundits apply a significance to a number, it doesn't oblige these numbers to actually be significant. The Dow surpassing 40,000, it is no different than a big birthday or a car odometer breaking 100,000 miles. Therefore, it's best just to celebrate if and when it happens, but avoid the temptation to search for a deeper meaning in a simple number. That's all for today's Wealthologist. I hope you have a great week and tune in next week for more insight from our team at Hobart Wealth.